Hey everyone, welcome back to Follow Me 11B. Discussions on current events, macroeconomics, and freedom and liberty from a veteran's perspective. Before we get going today, I'd just like to request everybody please press down on that like button. If you're watching on Rumble, please press that boxing glove icon and don't forget to subscribe and click that bell notification. It really supports the channel, helps grow the channel by letting the Rumble and YouTube know that this is content that people are interested in. Now, for the topic of the day today, I would like to talk business. Let's talk small and medium-sized businesses and try to figure out how things are going today in this economy for small and medium-sized businesses. According to President Joe Biden, he says this economy is strong as hell. But to dive further into this, let's go straight to a UBS for marketing purposes article. It's only about 3 paragraphs, but it's entitled "Small Businesses Continue to Struggle." This is from August 10th, 2022, and it is written by the U.S. editorial team of UBS, main contributor Brian Rose. And again, small businesses continue to struggle. It goes like this. Labor shortages are one of the factors making business conditions difficult. Today, the NIFB Small Business Optimism Index rose to 89.9% in July, up from 89.5% in June. Inflation, supply chain disruptions, and labor shortages continue to create difficult conditions for small businesses. The net percentage of businesses expecting better conditions over the next 6 months improved slightly, but is still near the record low, while unfilled job positions are near the record high. Labor shortages are one of the factors making business conditions difficult. Rather than trying to shed workers in anticipation of an economic downturn, many small businesses are trying to hire workers. And this is consistent with the strong growth in payrolls and wages seen in last Friday's labor report. It is also worth noting that the net percentage of businesses raising prices was 65%. Still high, but at least down from the peak. Oh, if it wasn't so sad, it would make me laugh a little bit. Let me say that again. The net percentage of businesses raising prices was 65%. Still high, but at least down from the peak. So the good news is this. Only 65% of the businesses that provide consumable goods and services to you have raised their prices. But the good news is they're down from their peak, and there's like 35% of other businesses, 35% of businesses that haven't raised their prices last month. This is from August, but it's still funny. Unbelievable. Moving on. Overall, the report represents a marginal improvement over the prior month. Inflation is weighing on both business and consumer sentiment, as Fed Chair Powell frequently notes. Getting inflation down is necessary in order to achieve a sustained economic expansion. I underline that. I think it's important. Let's examine what Fed Chair Jerome Powell is actually saying there when he notes getting inflation down is necessary in order to achieve a sustained economic expansion. Seems to me you could rewrite that in a less flowery way, saying something like, we have to get inflation down. How do we do that? By raising interest rates. Okay, I'm with you so far. What happens when you raise interest rates? Well, for example, we're going to have higher interest rates on homes, on cars, on credit cards. Let's talk credit cards for a second. Credit card is got a higher interest rate. Well, everybody kind of knows the situation with savings and Americans. We're not exactly known for having giant savings accounts. We like to get money and spend money. Well, if that's not available, what do you use? You use your credit card. If you got a 15% credit card rate and the credit card rate just went up by, 2, 3, 4, 5%, now it's 20%, say. Well, you might not buy that extra doodad that you probably would have 5 percentage points ago, particularly if you're not exactly sure if your job's secure. Funny though, the labor shortage is still one of the main problems in this. But point is, getting inflation down necessary to achieve a sustained economic expansion. Well, when people have a raised interest rate on their credit cards, they're going to be going out shopping less, and the places they do shop at are going to be the places they can get the best deals. If you can buy a widget at Walmart for $3 and you can buy that same widget at Dave's hardware store that's been on the corner for the last 55 years and it costs you $5, you're probably going to get it at Walmart. What does that mean? That means the small and mid-sized businesses are going to take a hit. Just one factor, but obviously that's what he's trying to say in a more flowery way. But when moving on, tomorrow's CPI data for July will be closely watched by markets, as continued high inflation would leave the Fed with little choice but to continue raising rates aggressively, which is what they've done. Lower gas should help to slow the headline inflation rate, but we expect core prices to show another big increase, keeping pressure on the Fed. And that's exactly what's happened. Again, main contributor Brian Rose. Let's take a look at some of these CPI numbers here. So from the Bureau of Labor Statistics, CPI in June, 9.1%. That's the high so far, the 40-year high. Then July, 8.5%. August, 8.2%. And September, 8.2%. Now, if you've seen any of the press conferences from the president, for example, he was touting that it's basically flat. There is no inflation. It's basically flat. It's 8.2%, and then September it was 8.2% also. But to put this in context and visually, stick with me here. February 2020, inflation rate 2.3%. Now, June, 9.1%. Okay? Are you with me so far? We were here. Now we're here. July, 8.5%, and August, 8.2%, and September, 8.2%. And they're bragging about this. Yeah, it's trending in the right direction, sort of, but it's still up here. It needs to be down here. And in my opinion, best guess, we're not getting there anytime soon. As a matter of fact, I wouldn't be surprised if this inflation, this 9.1% in June, isn't overtaken sometime in 2023. But we'll have to wait and see on that one. But I don't see this coming down anytime soon, if at all. Let's jump over to the labor force participation rate from Trading Economics. 62.1% in July. August, 62.4%, and September, 62.3%. In context, though, it was in February 2020, it was 63.4%. So we've dropped around a little over a percentage point. So that's not great. And as I understand it, that represents over 1 million workers in the system, able-bodied workers that are just choosing not to participate. A couple other nuggets here. From Bill Dunkelberg, the NFIB chief economist, 30% report, further 30% of business owners, small business owners and mid-sized business owners report inflation is still the single most important issue, obviously for good reason. Also from Trading Economics, see here, I believe this is also from Bill Dunkelberg, even with these challenges that we've already discussed, owners are still seeking opportunities to grow their businesses. So that's encouraging. However, what's not encouraging is trying to say that there's no inflation when it's 8.2% year over year. Up here, we need it down here. Somebody needs to maybe give the economists in Washington, D.C. a little block of instructions, because, a third grader would know the difference of high versus low. But I would love to hear what you guys think of the economy in your area. If you're a small business owner, a mid-sized business owner, or if you know one, you're related to one, you're neighbors with one, please post your comments below and let me know how things are going in the real world. Because in my opinion, things are getting rough for small business, and they're only going to get rougher. There's going to be casualties along the way during this rate hike journey that we're going through. And no matter what they do, they hike rates, then the prices of things are going to be more expensive for the consumer, and the consumer is either going to buy less or they're going to pay more, and both scenarios for the consumer are bad. Either your standard of living goes down or you pay a lot more. Some of these stores are going to be able to weather this storm a lot better than others. Some of the bigger ones, like Walmart's, the Amazons of the world, their business model is in bulk. They do a lot of business. They can buy widget A, and they can buy 1 million widgets. Meanwhile, the guy on the hardware store on the corner down the street that's been there for 55 years, maybe he only buys 50 of them, and he tries to sell them for retail. Well, these big boys can actually sell slightly below retail, and they'll bring in more customers. Maybe they make a little bit less on widget A, but some of the groceries, some of the other items in their store that they sell, they're going to make up for it there. But again, it could be wrong. I would love to hear what you guys think. In the meantime, until the next video, we are Follow Me 11B on YouTube, Facebook, Gettr, Twitter, and Truth Social, and follow the real Follow Me 11B on Instagram and on Rumble, and we will see you all on the next video.